Dear traders, I would like to welcome you at another episode Surfing the Elliott Waves. So it's a weekly video sponsored by Orbex. In this episode, I will look at the Euro, Aussie, Dollar, Swiss dollar, Yen, Crude, and the SP 500. So as you know, situation in Ukraine still is not getting better. In fact, there is a very big risk that this will even escalate to something bigger. Uh, as you know, this is a big threat to Europe. So obviously, we are seeing euro moving to the downside, and also stocks in Europe are also much lower compared to the US market. So firstly, if we take a look on the S&P 500, this market is still holding this support from last week. In fact, there was a very nice recovery, and looks like that we could see actually further strength if this trend line is going to be broken. So I'm tracking the price action and observation at the upper trend line of this channel. Looking at the 4-hour chart, well, notice that we have a very nice bounce after a drop below 4200. So this bounce, at least first leg here, looks like it belongs to a higher degree minimum free wave rally. So I'm looking and will be looking for more upside either into wave 3 or maybe just into wave C. We respect that this could be just another corrective flag. Okay, so in either case, I think that there is a real chance, at least from a technical perspective, that this market could see some recovery. Also, I see a lot of bearish sentiment on DAX. So I think that if this market is based on extreme readings, we'll see some recovery in the near future. Then obviously this stock market could also be much higher. However, you have Powell testimony later, so we will see how this will impact the markets. Maybe this will be more dollar related. It will be interesting to hear if maybe Powell will be more careful with their hawkish policy based on recent events. Okay, so this could definitely impact the US dollar. Since we mentioned US dollar, let's take a look how it currently trades versus the euro. Well, we have seen quite a nice move to the downside here on the euro dollar. We've been tracking this ongoing bearish impulse, which could still be underway. Notice that if we zoom this in a little bit, you can see that there's a wave 1, wave 2, and if that's a wave 3, well, wave 3 should be also made by 5 subways, which is the case. So if we respect all substructures, well, more weakness could actually occur after the next bounce, after wave 4. Of course, there's an alternate scenario that maybe this was end of a wave 3 and this wave 4, and that's already the final stages. In either case, I think that just be aware of at least temporary bounce, but this higher degree downtrend remains in play as long as this trend line holds here, connected from February highs. Okay, now let's take a look also on Aussie dollar. Now Aussie is doing much better compared to euro. One reason could obviously be because of Ukraine, as we said, which is threat to Europe, and then you have also commodities are trading higher. So obviously this could also have a positive impact on Aussie. We can also see here copper currently trading at the upper trend line, potential resistance here. But looking at daily charts here on Aussie dollar, I still think that this could be a wave B rally, a counter trend movement, or a sideways price action if you want, that belongs to an ongoing 7 swing correction. So I still think that there is a chance for more weakness. We are obviously trying to build a base here, but since recovery on the 4-hour chart, so I'll show you here on the right, you can see that that's not really an impulse. You have a plenty of overlaps here. Okay, so I still came out with an idea that this could be a corrective price action, meaning it can belong to a higher degree downtrend. But the resistance definitely should cause a 5-wave drop to make sure that we are turning back to the downside. So either we see a 5-wave drop from first resistance here at 7300 or maybe 7400. That would be the second important resistance area for Aussie. Okay, so these are two levels that I'm watching, from where I have to see a response to the downside to make sure that bears are coming back. Okay, but if stocks would really stabilize and maybe US market push a little bit higher, I think that Aussie could very easily be trading at the second area of resistance here. Now let's take a look also on dollar Swiss. Now why I want to bring on dollar Swiss is because Swiss franc will tend to be a very attractive, interesting currency, like another safe haven besides dollar and Japanese yen, and also gold, of course. So Swiss could do very well, or at least stay sideways, not really bearish that much compared to other currencies, if stocks would come back to the downside. So what I'm looking at here is presenting you an ongoing consolidation. So no really a bear trend here, but I just think that we should be aware for potential weakness here if stocks would also come to the downside, and at the same time if we see this dollar Swiss breaking this wave, this swing low at around 91.50, then I think that this could open room even for a retest of these 2021 June levels. Okay, so watch out what the market will be trading in the near future. In fact, on the 4-hour chart here, we could be dealing with an ongoing impulse. So as I said, if this wave D, it's actually 91.50 level. If this swing low is broken, and at the same time we see a daily close below this red trend line resistance of this support of this triangle, then I think that there is a risk for more weakness, especially if this would happen at the same time when stocks are down, or maybe even only sideways. Okay, now let's take a look on the dollar yen. So dollar yen is moving sideways, still here bullish on daily charts. In my opinion, we could see a break to the upside into wave 5. Why? Because if I look back, well, previously we had some very nice moves and then consolidations. Okay, so these consolidations represents a pause on the way up, and if we look back here, we had another very nice impulse up since summer of 2021 towards the end of that year. Okay, and then we just moved sideways since December. So I think that this is an impulse and that this is a correction. And correction typically represents, in our case, this wave 4. So I'm looking for a final push to the upside, ideally wave 5. So on the 4-hour chart, we already came out of this downward channel. In fact, the previous drop here was in 7 swing, and this is a corrective subdivision. So if market can recover here by the end of the day, or maybe even, let's say, by the end of the week above 115.80, then I think that more upside here could be seen in days ahead. If we see a drop back below 114.50, or even more important, 40 level or 37, I think that there is a risk for further weakness, or at least sideways chop to continue within this wave 4. Also, whenever we are looking at dollar yen, it's very good to look at Nikkei as well. So what I'm looking at Nikkei here, well, notice that there is a chance that you count this drop here in 3 waves with an ending diagonal here in this wave C. So I think that's a very interesting pattern, especially if this upper trend line is broken. Then I think that more gains here could occur, which could have a positive impact on dollar yen for more upside as well. Now let's take a look on crude oil. So crude oil is much higher based on the latest events in Ukraine. It looks like that this thing will just not stop so easily. However, there is still a risk that this market will stay volatile. I think that OPEC will try to act here. So we will see if there can be limited upside. 110 is definitely very important potential resistance area. Okay, so for now the trend is still up, but we see prices in a 5th wave. Of course, you would have to see a drop back below or back towards 90 or $100 in impulsive fashion to make sure that we are stepping into a correction, or that this uptrend is going to slow down. So from an Elliott wave perspective, as I said, I see 5 waves up. This can be extended wave 5, so still price action is good, and it may suggest that despite the very volatile moves, that we could be here moving into some very strong resistances, at least in the near term. So even if you're bullish crude, just be aware that there can be very nasty reversals. Now let's take a look also very quickly on German DAX, since we mentioned it earlier. So here on German DAX, well, notice that I can count 5 waves down after a recent break out of this triangle pattern. Okay, so these 5 waves down may suggest that we could be here very close to potential very strong support. So watch out for potential rally, even if just short term in 3 waves. I still think that former wave force here could be seen, especially when this trend line is going to be broken. So for now, yes, we are still bearish, but I think that this extreme sentiment is now moving into some very extreme levels here. Oversold conditions and 5 waves down suggest that we could at least stabilize a little bit. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video and talk to you soon. Bye.